Right now, there's a crisis brewing in Silicon Valley that nobody's talking about. AI is about to hit a wall, and it's not a technology wall, it's a power wall. By 2030, artificial intelligence could consume 25% of all electricity in the United States. That's not a typo. 1/4 of America's entire power grid dedicated to running ChatGPT, Claude, and the next generation of AI models. And here's the kicker. Our current power infrastructure can't handle it, not even close. But there's a solution, and it's creating a massive investment opportunity in an industry most people wrote off decades ago: nuclear energy. Today, I'm breaking down the AI power crisis and 3 nuclear stocks positioned to capture this multi-trillion-dollar infrastructure buildup. At the very end, I'll also share with you my framework about applying agentic AI in investing with all the lessons I learned at MIT. So let's get right into it, because when you see what's actually driving the surge, the scale of the opportunity becomes impossible to ignore. Hello and welcome to AlphaForge AI, where we hammer macro trends until they confess their secrets. Let's start with a number that should terrify every AI company executive. A single ChatGPT query uses 10 times more energy than a traditional Google search. Now, multiply that by billions of queries per day and you start to see the problem. But queries are just the tip of the iceberg. Training a single large language model produces carbon emissions equivalent to 5 gas-powered cars over their entire lifetimes. And we're not talking about training one model. We're talking about hundreds of companies racing to build bigger, more powerful AI systems. The United States currently has nearly 3,000 data centers running 24 hours a day, 7 days a week, 365 days a year. Right now, AI data centers consume about 4% of America's total power. But this is where it gets insane. Goldman Sachs projects a 160% increase in data center power demand driven by AI. By 2030, we're looking at AI consuming up to 25% of US electricity. To put that into perspective, the largest nuclear power plant in America produces about 4.5 gigawatts of power. The new AI data center campuses being planned, they need up to 5 gigawatts each. So that's basically the output of each of our biggest nuclear power plants for just one single new data center. So why can't we just build more traditional power plants? 3 reasons: speed, scale, and sustainability. First, speed. AI companies are building data centers at a breakneck pace. Meta's Oregon facility covers 4.6 million square feet. That's the size of 80 NFL football fields. And they need power now, not in 10 years when a new coal plant might come online. Second, scale. We're not talking about powering a few buildings. We're talking about powering entire cities worth of computation. Bloomberg NEF estimates we'll need between 78 and 123 gigawatts of new power capacity by 2035, just for data centers. That's like building 100 new major power plants. And third, sustainability. Every major tech company has made net zero carbon commitments. Microsoft, Google, Amazon, Meta, they've all promised to run on clean energy. Coal and natural gas are off the table. Solar and wind, they're intermittent. The sun doesn't always shine, the wind doesn't always blow, right? But AI data centers run 24/7, so they can't afford downtime. So if all the traditional options fail, what's left? The answer is both obvious and shocking. And it's already accelerating faster than anyone expected. Nuclear energy is experiencing a renaissance, and AI is the catalyst. The Trump administration just announced plans to quadruple US nuclear capacity from 100 gigawatts today to 400 gigawatts by 2050. That means America may need to build 10 new nuclear power plants in just the next 5 years, and many more after that. And it's not just government support, it's billionaire backing as well. Bill Gates, Warren Buffett, Sam Altman, Elon Musk, Jeff Bezos, Peter Thiel, they're all investing heavily in nuclear energy. Microsoft has already signed a landmark fusion power deal with Helium for future data center capacity. And cloud giants like Amazon and Google have formally pledged to support a tripling of global nuclear capacity by 2050 as they hunt for clean 24/7 power for AI. This isn't speculation, it's happening right now. So, which companies actually stand to benefit? Let's start with a company that sits at the center of a nuclear roadmap most investors don't even know exists. And it's already years ahead of competitors. Hey Anon, let's take a little break before diving into the three companies I think could benefit most from the nuclear renaissance. You know, people call us creators or influencers, but let's be honest, it's just a fancy way of saying slave of the algorithm. So please do me a huge favor and help me to please my AI overlord by hitting the subscribe button. Just a small click for you, but a big boost for me in the eyes of the algorithm. And don't forget to watch till the end to get my MIT framework on applying agentic AI to investing. Okay, so now let's dive into the three nuclear stocks I think are the best positioned to capitalize on this AI power boom. But don't forget, this is not financial advice. I'm not a financial advisor. I'm just your part-time alpha mechanic and full-time data gremlin. So right now, first up, NuScale Power, ticker SMR. NuScale is the leader in small modular reactors, or SMRs. Think of these as nuclear power plants you can build in a factory and deploy quickly, rather than massive 10-year construction projects. Each NuScale module produces 77 megawatts of power, and you can combine up to 12 modules for a total of 924 megawatts. Perfect for data center campuses that need flexible yet scalable power. The game changer? Construction time. Traditional nuclear power plants take 7 to 10 years to build. NuScale's modular approach cuts that down to 3 to 4 years. Now, here's the massive catalyst. In October 2024, NuScale announced a partnership with the Tennessee Valley Authority, one of America's largest public power providers, for up to 6 gigawatts of new nuclear capacity. That's not a pilot project. That's enough power for multiple mega data centers. And TVA explicitly stated this is targeting AI and data center demand. NuScale is also the only SMR designed to receive full approval from the US Nuclear Regulatory Commission. That regulatory moat is massive. It took them nearly a decade to get that approval, and competitors are years behind. The stock? It's volatile. NuScale went public via SPAC in 2022 and has had a rocky ride. But with the AI power crisis becoming undeniable and government support surging, this is a high-risk, high-reward play on nuclear's comeback. From a technical analysis perspective, NuScale's chart tells the same story as its fundamentals. High potential, but deep in a correction. NuScale is down 68% from its $57 high and still locked in a confirmed downtrend on both daily and weekly charts. The breakdown below 30 in late 2025 destroyed the prior uptrend, and SMR has been sliding along a steep regression channel ever since. Price now sits on major long-term support at the $16 to $18 level, aligned with the weekly 200 EMA. A bounce is possible, but momentum is still firmly bearish. Short-term resistance sits at $20 and $23, and SMR stays bearish below those levels. Lose 16 and this chart opens cleanly towards $11, the April 2025 pivot. In short, $16 to $18 is the last stand support, $23 is the reversal trigger. The overall bull case for NuScale is that even if just 10% of new data centers choose their technology, we're talking about a 10x revenue opportunity. The bear case is execution risk. They still need to prove they can manufacture and deploy at scale. But while NuScale is the regulatory favorite, the next company has something far more explosive, a technology that could rewrite the entire nuclear industry. Stock number 2, Oklo Incorporated, ticker OKLO. And this one has serious Silicon Valley backing. Oklo is developing advanced fission reactors called fast reactors that can run on recycled nuclear waste. Yes, you heard that right. They're turning nuclear waste into fuel. Their flagship product is the Aurora Powerhouse, a 15 megawatt reactor that's compact, safe, and designed specifically for remote locations or facilities that need dedicated power, like AI data centers. Here's why this is brilliant. The US has about 90,000 metric tons of nuclear waste sitting in storage. Oklo's technology turns that liability into an asset and solves two problems at once. Now, the Sam Altman connection. The CEO of OpenAI, the company behind ChatGPT, is Oklo's chairman and a major investor. This isn't coincidental. Altman knows better than anyone how much power AI needs, and he's betting on Oklo to provide it. In fact, Oklo has already signed letters of intent for 750 megawatts of power, and their target customers, data centers and AI companies. Oklo went public via SPAC merger in May 2024, so this is still early stage. They're targeting 2027 for their first commercial deployment in Idaho. The overall investment thesis here is pure venture capital style. If Oklo successfully deploys their first reactor and proves the technology works, this could be a 20 to 50x opportunity. But if they hit regulatory delays or technical hurdles, it's high risk. This is the most speculative of the 3 stocks I'm covering today, but it also has the highest potential upside. You're essentially betting on advanced nuclear technology becoming the standard for AI infrastructure. But what if you want exposure without the volatility, a safer way to profit from nuclear's return? That's where the third stock comes in, the most conservative play in this space, Cameco Corporation, ticker CCJ. While NuScale and Oklo are building reactors, Cameco is the picks and shovels play. They are the world's largest publicly traded uranium producer. Here's the simple thesis. Every nuclear reactor, whether it's traditional, small modular, or advanced fission, needs uranium fuel. No uranium, no nuclear power. And Cameco controls about 18% of global production. The supply-demand dynamics are incredibly bullish. Global uranium demand is projected to increase 62% by 2050, driven by both new reactor construction and existing plants extending their lifespans. But here's where things get really interesting. Uranium supply is constrained. After Fukushima in 2011, uranium prices crashed and mines shut down. It takes about 7 to 10 years to bring a new uranium mine online. So even with prices recovering, supply can't catch up quickly. Cameco is perfectly positioned. They have tier 1 assets in politically stable Canada and also Kazakhstan, long-term contracts with utilities, and they're already profitable, unlike the reactor startups. The stock has already had a strong run. It's up over 200% since 2020. But with nuclear capacity potentially quadrupling by 2050, we're still in the early innings of this uranium bull market. Cameco's chart is the opposite of the 2 reactor startups. It's strong, established, and still riding a long-term weekly uptrend dating back to 2021. Even after a sizable correction from the October 2025 high at $108, the long-term structure remains bullish, and buyers just defended $80 with a sharp 15% rebound. The stock is now consolidating between support at $80 and resistance at $90, which also lines up with the 50-day EMA. A daily close above $90 would realign short-term momentum with the larger uptrend and open room towards new heights. But if CCJ loses $80, the daily trend turns bearish, with $70 becoming the next major support at the 200-day EMA. In short, CCJ is coiling. Breakout above 90 is bullish, breakdown below 80 turns the chart negative. This is overall the lowest risk way to play the nuclear renaissance. You're not betting on unproven technology. You're betting on basic supply and demand for a commodity that's essential to nuclear power. So, with three very different ways to play the nuclear renaissance, how should you actually structure a portfolio around them? If you want a diversified nuclear play, consider a barbell strategy. Put the majority in Cameco as your stable, profitable core holding. Then allocate smaller, speculative positions to NuScale and Oklo for upside exposure. For example, 60% Cameco, 25% NuScale, and 15% Oklo. That gives you uranium exposure as the foundation with two different reactor technology bets. The key risk to watch? Regulatory delays. Nuclear projects can get held up for years by permitting and safety reviews. But with bipartisan political support and the AI power crisis becoming undeniable, the regulatory environment is the most favorable it's been in decades. At this point, I want to take a moment to thank the one and only Mario, aka Mr. Market Edge, for providing this technical analysis. Highly recommend you guys go over to his channel, check it out if you're interested in expert takes both on fundamentals and technical analysis. You find the link in the description. So, the deeper you look, the clearer the pattern becomes. AI isn't just another technological shift, it's the single largest energy event in modern history. And the world is nowhere near ready for the power it demands. Every chart, every projection, every data point points to the same conclusion. AI will not scale without nuclear. It's the only energy source that's clean, dense, reliable, and politically also aligned with the decarbonization goals of every major tech company on the planet. NuScale, Oklo, and Cameco are three ways to position your portfolio for this multi-trillion-dollar infrastructure buildup. NuScale brings speed and scalability. Oklo brings entirely new fuel cycles and potentially generational upside. Cameco brings the essential commodity the entire industry runs on. Together, they form the backbone of a multi-trillion-dollar infrastructure buildout that AI has already set in motion, whether the rest of the world is ready or not. So, the real question isn't, will nuclear power the AI age? It's, how early do you want to be before the rest of the market catches on? Because once the power crunch becomes impossible to ignore, these opportunities won't look like opportunities anymore. They'll look obvious in hindsight. This is Alpha Forge Investing, where we forge alpha from market data. If you want more deep dives like this, subscribe and hit the notification bell. Also, join our Telegram community for daily updates, better access to my stock analysis agent, and my Agentic AI in investing framework with all the lessons I learned at MIT. And while you're at it, also let me know in the comments which of these three nuclear stocks are you most or least bullish on. Finally, feel free to check out my analysis on the AI bubble and Cathie Wood's 2026 playbook. Links in the description. Of course, none of this has been financial advice, just sparks from the forge. Always remember, the market is the forge and your research is the hammer. Thanks for watching and see you in the forge.